Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a daily candle chart of the CBOE Volatility Index, ticker symbol VIX. As you can see from this chart, yesterday we had a big red candle there as the CPI numbers came out beating expectations. And as a result, we also formed a bearish engulfing candle. Now, a bearish engulfing candle is when you have the body of that red candle engulfing the previous green candle. But what's most interesting is that candle is engulfing the two previous green days. So what does that mean? Well, for the next couple of days, I do believe that the VIX is going to drop just a little bit more. And if we look at the bottom of the chart here, you'll see that there is a gap down below right here. See that open gap right there? Let me draw my horizontal line. That would be the gap fill point. So I think Monday and Tuesday, we could see a drop in the VIX to fill that gap. And then guess what? Right back up. And I'm getting pretty aggressive with that to match the target that I had from back here. And I know I get a lot of criticism about that. They say, well, how could you be wrong if you're going up and down with your forecast? Well, I'll tell you, if you've tuned into the webinar that John Najarian and I did talking about how we dance with the market, we have a lot of option traders that are spread traders. And so we make money whether the market goes up, down, or sideways. And it's very important for those option traders to know where the support and resistance levels are. You can stay tuned to the end of this video and I'll tell you more about what's happening because we have some exciting news where midweek, next week, I'm going to be doing a midweek market report. And we're going to be doing that in the middle of the week so that you folks can trade out the rest of the week. We've had a lot of people request that, and so we're going to deliver to provide more value for you. So there's my forecast for the VIX, down to fill the gap, and then right back up to 29.51. Now, if we look at SPY, this is the ETF that tracks the S&P 500. You can see that we started off over the past 2 weeks. These forecast lines have worked out just right. I said the week before last we would go up, hit that target, come down. We hit that target. We moved up this week, hit that target, came almost down to that target. And guess what? Again, the CPI numbers come out and surprise the market. Now, I'm going to be talking more about that. But until then, I'm expecting a little bit more on the upside, just a little bit. And I think we're going to move back down to fill this gap right here. So upside target, just a little bit up there, 402.71. Then right back down to 387.45 with a further target here. So giving the stages of support for our option traders. So we have that downside target right there at 366 and then the ultimate support down here at that level of 347. I think a lot of people are going to be surprised when we finally take out those lows, which I do believe we will. Again, I'll show you the evidence as to why I do believe that. So stand by and watch out for the downside. If you're taking short-term positions, bullish positions, then just be sure that you're taking profits quickly because like I always say, you can't lose money taking profits. Now, if you look at the tech sector, QQQ, look at that. We hit the target that we had from the week before last. That is a resistance area, but look down below. We have much lower volume. We have about a 30% drop in volume on this higher high. And notice down below the CCI, although that is a higher price high, the CCI is showing a negative divergence. Last time we saw that was way back here. And what happened? The market tanked into another down leg in this bear market. And I think that we're going to see a continuation of this bear market as we move through time. In the meantime, a little bit higher, again, only because the markets are showing that upside momentum on the price action, and then right back down to this moving average. Downside target for next week, 275.90. I'm not going to erase any of these lines right here for now because I want to give you that record of how the price action has worked out based on these forecasts. And it helps build confidence when people see how the prices move to the technical signal. So that's QQQ. If we take a look at IWM, this is the small cap ETF. Interesting thing that happened today. We filled this gap up here. Let me just draw that line. After hitting this resistance, we filled this gap right there. Look straight across perfectly with a shooting star. That is a bearish candle. We did a presentation yesterday for our equity traders. This is one of my most favorite candles because 80% of the time when you see that shooting star show up, we generally get movement lower. And that's exactly what I think we will see. In fact, I'm not quite sure we're going to see much upside on IWM next week. So I'm going straight down from that shooting star right down there at 180.57. Again, keeping that down as a lower target. These are all support levels down here. Again, for our option traders, I think you're going to have a great time next week, especially as we roll for cash. You know, there were a couple of comments that came in to the section here under the YouTube channel. And a lot of folks, I could tell, are stressed by the way they ask their questions. And that tells me that a lot of folks are trying to more or less day trade or go too directional, and they're not using good risk management technique. I assure you that our option traders, even in an up week like we had yesterday and even in today, our option traders are in great shape, even though we have put spreads on, because next week we're going to take in a whole bunch of cash as we roll our short positions out to December. Now, if you're not an option trader, you may not know what I said there, but over time, if you stay plugged in to my webinars and stay in tune with Market Rebellion and the educational offerings that they have, I teach through repetition. I'll show you how to do this, how to read the charts, how to position yourself to where you can make money up, down, and even sideways. That's what spread trading is about. In 80% of the market conditions, even in the big down moves, we can make money with put spreads. The times that we don't make money is when we get really big upswings. And even then, when we're not making money on the way up, we can adjust our spreads up to take in cash to absorb the downturns when the market moves against us. And that's what option trading is about. That's what I refer to as doing the dance with the market. So that is IWM. Looking at the DIA, which is the Dow Jones Industrial Average ETF, look what happened here, folks. Look at that green dotted line. What is that? That's the gap fill. So we have a hanging man right there on the diamonds, gap below the market, wide divergence from the moving average. We have this drop in volume. Again, it's a sign of weakness. We have negative divergence on the stochastics. We have a little hinge there on the CCI. So if you're taking out your trading checklist, which is something that I offer to all of our members, we look for the buy signals and the sell signals. And right now for the diamonds, we have all sell signals stacked up. There is nothing on that chart right there that's showing up as a buy signal. So keep that in mind, especially if you have short-term long positions. You want to make sure you're taking your profits. So for next week, I think most definitely we're going to come down, fill that gap, and maybe go a little bit more, testing that moving average. So downside target is 325.96. And then we're going to have to see if the PPI numbers surprise us the other way. So it's going to be an interesting week next week. And with that, let me go to the geopolitical report. As I mentioned, I find the geopolitical news is helping a lot of people. Some people think it's worthless. Others, like Maureen, I was talking to Maureen's husband, John. John is trading. He's one of our clients. He told me Maureen is in the real estate industry, and she likes to hear this news because it affects her industry. Absolutely, like it affects all of us. But if you learn how to take this geopolitical news and apply it to open up your eyes and expand on those horizons, you're going to be much better off with your positions. So you're not going to be fighting the big picture trend. Now, this is one of the things that we have to watch out for after the election. What's really happened here after Tuesday, and they're still counting the votes, as you might already know, the red states got redder and the blue states got bluer. What is that going to do coming into 2023? It's going to create even more political tension than what we've seen already. So that may not make the investors happy. I'm just mentioning that right now because it's happening right before our eyes. They're still delaying the vote count. And so that's creating tension already right out of the gate. Now, as I go to the next slide here, you're going to see that our $31 trillion debt that we're currently carrying right now is going to be worsening with regard to interest rates on the rise. Now, if you think the Fed is going to shift away from that 75 basis point hike and maybe go less to a 50 basis point hike, understand something, that is not going to change anything, because we're still carrying all this debt. This is amazing, folks. Look at the amount of money that we have on defense as compared to other countries. We spend more on defense than all of these countries combined. That's absolutely insane. And interest rates are going up. We're carrying more debt. And this is coming from the Peterson Foundation, where they showed the change in the Congressional Budget Office and how they're looking at the future over the next 10 years. Well, what does that red mean on that chart? Well, coming into 2021 in their projections, this is what they were expecting to be an interest cost to us, the taxpayers. But after 2022 projections, all this red is a modification or an adjustment to what they believe we're going to be paying in interest. Now, I don't even think we're going to get to this level before things start to really implode on our economy. So this is, again, something you have to keep an eye on, because this is like you maxing out your credit cards. The cost of interest is going up with interest rates going up, and you're working yourself deeper into a hole. All of that red means is that we as a nation are working ourselves into a deeper hole. Now, again, remember I was talking about the CPI numbers. I'm going to talk a little bit about manipulation and how that works, because it is happening. First and foremost, understand that Bloomberg put together the 7.9% estimate based on economists that they surveyed. Isn't that interesting? Well, how do they come up with a number? And even so, how do they come so close to the actual number that was released at 7.7%? Well, let me show you something here, folks. These are the actual numbers, right? This is what came out, 7.7%. And you also have to ask yourself, like I've asked people before, remove that thought in your mind that that's the real number for a moment and try to understand why they might remove the food and energy inflation. Well, here's why. They don't want you to see the real inflation. They don't want you to see the increase in energy costs. Look at fuel oil right here. In the past 12 months, the cost of fuel in heating your home has gone up 68.5%. This is real inflation, folks. This is what is affecting the average American. They could care less about CNBC and the financial programs and the Fed and the Congressional Budget Office and the Bureau of Labor Statistics. All they care about is how far their money is not going anymore. That's all they care about. And so these are the real numbers, and this is what I think is going to drive us into a deeper recession. Now, the CPI numbers came out, obviously, at 7.7%. And what would have happened if Bloomberg would have come out with a 7.6 projection, and they missed by 0.1 on that report? Well, the market would have dropped 1,000 points if they had missed. And so the market reacted as though the CPI numbers were showing that inflation is going the opposite way. And it's not, folks. Inflation is still there, as I just showed you. It's still going up, but at, a so small of a fraction at a pace that it slowed down. Well, when energy starts to rip up to the upside again, I think you're going to see a different picture on this particular chart. Again, this is inflation spiking through the roof, going vertical, and there is no sign of a pivot point right there. Now, again, look at the cost of fuel at the pumps. This is a recent chart from the AAA, and you can see that diesel costs are still going up. When you put this in perspective, what does that mean? Diesel is up 47% from a year ago. Let that sink in. 47%. How does that compare to a 7.7% CPI? That's not reality. We all see the reality every time we go fill up our tanks. Well, in the last month, diesel has gone up 6.5%. And like I said before, as we get closer and closer to a real life emergency with regard to diesel shortage, you're going to see diesel go through the roof. That's a fact. It's happening already. We're seeing the increase. Keep your eye on the AAA website so you could track along with that as well. Now, if you look at what's happening with gas prices in Germany, now Germany has a solid economy. If Germany goes down, all of Europe is going to go down. They don't have anywhere near the debt that we have in the U.S. as far as our economy. And the gas crisis there has wiped out $100 billion from their economy. And that's just Germany. What's that going to happen to the rest of the countries in Europe? We'll have to see as prices continue to go up. This is another very interesting chart because this is another smack in the face with reality. Look at what's happening to consumer credit. People are still using their credit cards, but what's happening to their cash? What's happening to their personal income, disposable income? It's going down in the toilet. The wider this divergence gets, the more likely people are going to start filing for personal bankruptcy. That's absolutely not going to help our economy, not in the slightest. Now, here's something again. If you've ever walked into a Dollar General, I don't go into Dollar General all that much, but people who tell me are saying that this story is absolutely true. This came out through MSN News, and they were interviewing an assistant manager at a Dollar General. Look behind them. Product is not moving. This is Dollar General, folks. Their inventory is still being delivered, but people don't have the money to buy it. Go into a Dollar General. In fact, I might even try to do that this weekend to see how many boxes are stacked up in the aisles. This is a sign, again, of a weakened economy. It's a leading indicator when you see it with your own eyes and you're walking through the aisles and you're being there and you're talking to people. I often tell people, don't listen to the news. Turn it off. Go hunt for the news. Go out there and talk to people. Ask them that question. Hey, how are you doing? Look them straight in the eye and say, no, how are you really doing? How's this economy affecting you? Go out there and do your own little survey. Interview people. You're going to find out that it's pretty stressful for them. Now, this might sound like a black cloud coming over our heads. Oh, it's so ominous. Oh, AJ, why can't you focus on the positive? Let me tell you, folks, if you know me, I'm the ultimate optimist. I'm always looking at the bright side. And I am looking at the bright side here because we can make a lot of money on the way down. Following the trends, putting your money in the direction where the money is going is going to put the odds in your favor. Instead of trying to fight the trend like many of the investors are out there and having a hard time losing money in 2022. Here's something that was very shocking to me right now. Holiday hardship. 25% of Americans can't afford to spend $100 on Thanksgiving. And many of them are skipping the holiday altogether. That's hard to hear. This is my favorite holiday of the year, by the way. We have a lot to be thankful for. I love this family time where you sit around the table, you thank Almighty God for everything that you have on that table, and you go out there and you do the best that you can. Well, a lot of people can't even afford the turkey. That's pretty sad. Again, that's a leading indicator right there. Now, this is something, I don't know really why they split this up into political parties because it really doesn't matter. They could have averaged all this in and you're still going to get the same picture. But this is from the University of Michigan consumer sentiment based on the party. But look at what's happening. They're all reaching for the lows. Consumer sentiment is falling off a cliff. And when you think that's bad, again, shouting out to Maureen here in real estate, look at that blue line where that red arrow is. That's setting a new 10-year low. Again, that is a leading indicator. When you think that's bad, look at the gold line right there. That's the large household durables. You're talking refrigerators, dishwashers, things like that, televisions. That should be going up as we're getting closer to holiday buying season, and it's not. It's about to set a new 10-year low. So, like I said, we have some good news. Remember, we're going to be putting together a midweek report. That is by request. If you go to the Market Rebellion page, you'll see the link to register for that. I'm going to be putting out the midweek market report so that you still have some days to go trade and make some money before the weekend. I know a lot of people say, well, why can't you do this while the market's open? I put it out on Friday afternoon and you got to wait the whole weekend before you trade, right? Well, that's why I can't wait till Monday mornings. It's really a lot of fun. So understand that Market Rebellion is here for you. I'm here for you. I'm ready to take you through the steps, guide you along the way, help you with risk management, help you with setting your goals, and help you with your trading strategies. So with that, you have a great weekend, folks. We'll talk to you next week. So long.
I mean, you take a beginner and someone who's a little naive and doesn't really understand how options and stocks work, and then you can actually educate them to have more knowledge than a lot of the brokers. Brokers don't even understand a lot of stuff you guys teach. In fact, I just talked to a broker. He says this is the only place that's taught in America.